As shared in the previous video, as soon as Bitcoin broke below the final external structural level at 74.9 thousand, price moved into sell-side liquidity. SSL absorbed the liquidity underneath and successfully produced the first reaction bounce. Since Bitcoin has already moved higher after taking liquidity, the chart is now showing a structure where additional upside can still be considered. So in today's video, we'll go through Bitcoin, XRP, and Ethereum together. As for my current positions, I've already fully taken profits on my Litecoin short position, and over the weekend, I opened new long positions on XRP and Dogecoin. For now, I'm still holding both positions without taking any partial profits. Alright, let's jump straight into the chart analysis. Let's start with Bitcoin. If we look at Bitcoin's price structure over the last month, we can see that the market has continued forming higher highs and higher lows, and the final bullish leg that broke into new highs originally started from the 74.9 thousand low. What that means is simple. There is now a large concentration of stop losses from long positions sitting below 74.9 thousand. Because over the last month, Bitcoin maintained structure without breaking any previous major lows. That naturally creates market expectation that this low should hold again. So, when we read charts, what we're really doing is trying to understand how market participants are positioned and what they're expecting. And once price breaks below a level like this, a large cluster of stop losses gets triggered. Those stop outs become market orders. And these are exactly the conditions where smart money can efficiently execute larger positions. This isn't something unique to the current market. We see this repeatedly on Bitcoin charts. And not just Bitcoin, we see the same behavior across Nasdaq and other futures markets as well. If we look back at the March structure, Bitcoin was also building bullish structure. Then price broke below the low. That initiated the final expansion. That move triggered a large number of long stop losses, and shortly after that, Bitcoin continued higher again. The same thing appears on larger structures too. Price breaks below the low where the last bullish expansion started, long positions get stopped out, liquidity gets absorbed, and then large buying activity from smart money comes into the market. Now, if Bitcoin breaks through these intermediate supply zones and confirms a second bullish expansion, then the next place we need to pay close attention to is the previous high. Right now, the major high sits at 82.8 thousand. This is a very clear daily time frame high. Because of that, there's a strong probability that many traders currently holding shorts have their stop losses sitting above 82.8 thousand. So if Bitcoin starts breaking into that level, I think it'll be important to watch the structure very carefully. Now let's move to XRP. I'm still holding the position without taking any partial profits. The reason I entered XRP is very similar to Bitcoin. The previous long position I was holding was closed near the highs, just like I shared in earlier videos. After that, price continued lower, but during the decline, price broke below the low of the previous bullish structure. That process triggered a large amount of long stop losses. At the same time, price reacted directly from the order block that originally created this bullish impulse. That reaction gave us the bounce. For now, I still believe XRP has room for additional upside, so I'm continuing to hold the current long. As for shorts, I haven't identified a clean short setup on XRP yet. There still hasn't been a clear bearish impulse. Right now, I've only marked the liquidity sitting above the highs. But if XRP continues moving higher and starts forming a clear local high in distribution area, then we'll start creating the conditions for another liquidity sweep. At that point, if price sweeps the highs and strong selling pressure appears, I'd either consider entering a short position or closing the existing long. But for that, I want to see more development in the XRP structure first. Now moving to Ethereum, Ethereum swept this low, triggered a large amount of stop losses, and at the same time reacted from liquidity inside the demand zone. That created the first reaction move. There is one area where Ethereum could become a valid short setup if price moves higher. That zone is roughly between $2,322 and $2,344. This area sits right before the bearish impulse that initiated the downside expansion. That order block is still valid. Price did leave a rejection wick during the bounce, but it failed to fully tap into the upper liquidity before rotating lower again. So structurally, this chart still looks like it's encouraging traders to accumulate stop losses above. I haven't opened an Ethereum position yet, but if price reaches the supply zone I've marked, or if we see a sweep of a major low or high, I'm planning to look for entries there. For reference, the current sell-side liquidity low sits at $1,937 and the buy-side liquidity high sits at $2,464. So if you're trading Ethereum, I think those are worth keeping on your chart. So that wraps up today's quick breakdown of Bitcoin, XRP, and Ethereum. I hope today's analysis helps with your trading, and I'll see you in the next video. Thanks for watching all the way to the end.